a very important topic. The topic is on forensic accounting. When we were sharing the brochures and others, we got a call that Vivek, why are you calling it forensic accounting? Why are you not calling it forensic audit? And there's always this discussion for last 1 year since Institute has come out with the forensic accounting standards. When we talk about forensic accounting and when we talk about forensic auditing, Sandeep ji is a better person who can give a more of a brief on the discussion. But why this session? We had a session last month also where we had Mr. Satish Shinoy and Ms. Deepa Agarwal discussing forensic accounting. And again today and next week, we are having a 5-day crash course or workshop, I would call it, where we have Mr. Chetan Dalal, Mr. Durgesh Pandey. We have Mr. Chetan Dalal, Mr. Durgesh Pandey. We have Nachiket ji, who will be taking us through use of excellent forensic. We have Anand Jangi ji, who will be talking about tools in forensic. And CA Punit Grewal, who will be giving us a practical insight on the investigation and report drafting. Vivek, why you focus on so much on forensic accounting? Friends, this focus is because we perceive that in near future, it may happen that forensic will be the only accounting, or we can say detailed digital analysis of the transaction in the digital world. And due to same, forensic accounting becomes important. Friends, I, Vivek Agarwal, welcome you all as the convener of ACA CA Study Circle for this interesting session on forensic accounting. Respected Sandeep Baldava ji and all the delegates who have joined this session online, we welcome you at ACA. Forensic accounting is evolving, an important area of practice, which we all should look forward, and it requires mix of youth and experience. We are thankful to Sandeep ji, our speaker, who will show us the path that will give us fresh energy to rethink and reset our life. Then we are happy to inform that we are having a 5-day, 15-hour workshop on forensic accounting and investigation next week, where we will have topics like forensic accounting, upskill yourself, walkthrough of forensic risk assessment. That is, if a company calls you and says, Vivek, we don't have any issue in the company, but I want to have a ascertainment or I want to have a review that if a forensic is done, what can be the issues or whether there is a leakage. So practical case studies of forensic accounting, that is the cases which unearths and detailed procedure of forensic investigation and drafting of report. Thereafter, we have Mr. Nachiket, who will be taking us from using of excellent forensic investigation. The speakers for the said workshop will be CA Chetan Dalal ji, CA Durgesh Pandey ji, CA Anand Jange ji, CA Punit Grewal ji, and CA Nachiket Patnekar ji. It will be from 16th to 20th of Feb. The timing will be from 16th to 19th, 4 p.m. to 7 p.m. And on 20th Feb, that is Sunday, 10 a.m. to 1 p.m. Friends, with this few words, I request CA Vivek Nevatia ji to give a formal introduction to the speaker.
Thank you, President. Given a wonderful introduction of the topic and the fact that this topic is going to be the future of the profession. And we have a very eminent professional amongst us who will be deliberating on practical workshop and practical nuances of forensic accounting. And this insight, Mr. Baldava, that will be given by him would be helpful for us professionals and helping us decide as to how we should develop the accounting as a profession in our respective firms. Mr. Baldava is a chartered accountant, a certified fraud examiner, and CISA by qualification, having over 25 years of professional experience. He has led forensic investigations, fraud risk assessments, and anti-corruption review engagements for companies across the globe, and has been an international peer review and on forensic engagements across the world. His forensic experience has spanned across service sectors and business functions, including foreign exchange, revenue recognition frauds, recruitment frauds, and uncovering conflict of interest situations. And he has cracked complex cases using his forensic skills. He has been an author as well and led forensic risk assessments in leading corporate sectors across pharmaceuticals, banking, technology, automobile, infrastructure, etc. And has been instrumental in also M&A scenarios, advising corporates and private equity firms on pre-investment forensics, which is again would be required considering the markets are buoyant today. And I think Mr. Baldava would be giving us a lot of practical insights on this subject. Thank you, Mr. Baldava, for being at ACA. We are really, really privileged to see you here and deliberating on this subject. Thank you, Mr. Baldava. Over to you,
Thank
Mr.
you.
Baldava, for your deliberation, please.
So thanks, Vivek and Vivek. So Vivek Square for inviting me for this session. So thanks to ACA for organizing this session. So it's always a pleasure to come back and speak at the institute. So I used to do that physically almost every alternate week at different branches, regions, conferences. But now it's all virtual. Hopefully, we'll go back to the physical method very soon, assuming that this is the last leg or the wave of the so-called pandemic. So let's hope, and I hope everyone is doing fine. So I'll start with first setting the tone for the session, and then expanding what Vivek and Vivek just summarized. Forensic today is becoming an integral part of almost any kind of review or audit that you do, right? And there are expectations that even if you are doing internal audit, if there is a large scale fraud that is happening, you are required to at least identify if there is a large scale fraud happening. If you are an auditor, then there is an expectation that if there was a scheme that was running, if there was a large scale fraud, material fraud that was happening, at least you have performed procedures to detect such kind of frauds. To such an extent that slowly in the minds and then in the view of the common public, there is very limited distinction now in terms of different audits, right? So that is another job all of us have as professionals, to make sure that we explain people what is the difference between each of the audits, because each has a different connotation. Earlier, it used to be like people used to confuse between internal and external audit. Now, I think people confuse with forensic audit on everything, pretty much. So much so that any issue that happens, small or big, everybody's demand is to do a forensic, audit. And in fact, I actually refuse to use the word audit, because forensic is actually not an audit. And I was part of the institute's initiative where we came up with the forensic standards, forensic accounting and investigation standards. And we specifically not use the word audit, because based on our research, practical experience and all, audit is a different concept, and investigation is a completely different concept. So all of us need to make sure that we create that distinction in everything that we do. And that's also a bit of a background why we came up with this book. So I've been doing investigations for 24 years now. Way back in 98, I started with some of the largest cases then. Of course, in those cases, it was never called as a forensic investigation or audit per se. It used to be called special investigative audit or special review, something like that. That's how the words were used in those days. And one of the requirement that everybody sort of came up is that we need some practical insights into how this field works, what is that we need to understand, etc., etc. So that's the reason why we came up with this book. So where I tied up with Deepa, who has I think who was there in the previous session, along with Satish Shenoy. She has the expertise on the technical writing, she was part of institute, plus also she has written a couple of other books on technical topics, and I have a lot of practical experience on the subject. So we tied up to capture all the requirements, first of all, in India on fraud reporting, because what we found is that in India, we don't know what are the requirements at one place on fraud reporting. So what is the responsibility of an internal auditor? What is the responsibility of auditor? What is the responsibility of management? What is the responsibility of a CEO or a CXO? What is the responsibility of independent director, audit committee, etc.? There's a lot of, I think, gray area over here in terms of how people understand what are the different responsibilities of different stakeholders in terms of fraud detection and reporting. The second objective was to capture the entire concept of forensic, accounting and investigations, including clearly explain how each one of them differ. So I would recommend, I've not spent too much of time on the, book, because that I would request you to, sort of purchase and then go through it. It captures in details. My screen is visible, Vivek?
Perfect.
Yes, sir. Yes, Mr. Baldava.
So first, I think a disclaimer. So the content of whatever I present is my personal view and nothing to do with my organization. So that's a standard disclaimer. So this is again just the summary. I'll take 5 minutes to explain. So what we did over here is, like I said, we captured all the rules, regulations, and case laws around fraud reporting. Then we covered everything around fraud concepts and then forensic investigation, accounting methodology. And we brought in some experts, the relevant stakeholders, the audit committee chairs, the independent directors, a CEO, a CFO, internal auditor, auditor, so people from different backgrounds, a lawyer, to take their insights on each one of these topics, and how in their practical experience of more than 2 to 3 decades, how they feel this area needs to be addressed as part of their day-to-day requirement. And the book is again structured in a manner that you start with what are the concepts of white collar crime. It is important to understand again the definition of fraud, because it varies from different regulation to different regulation. And unless you understand, you would not be able to appreciate what is considered as a fraud. For example, if a diversion of fund happens in a banking scenario, can you call it as fraud? So what's the definition around that? What is insider trading, and then when do you consider that as fraud? So that was the second part, where we captured what are the different definitions, which is important to understand, along with the concept of integrity and ethics, because unless you improve the integrity and ethics within the society as well as within the organization, it's difficult to sort of reduce the impact of frauds, because howsoever strong your detection processes are, howsoever strong your hard controls are, it is important to implement soft controls in the form of proper training, proper guidance, etc., so that majority of the people don't sort of try to take advantage of the situations that they may face on a day-to-day basis to their advantage. Then we captured, like I said, I think somebody has raised hand. So do you want to take questions now, Vivek, or later?
So later, we'll take the questions at the end.
Yeah, so if you can put in the chat box, we'll address the questions in the last part. So we have almost 30 minutes reserved for that. So we'll take the questions then. Then I already explained the concept around the roles and responsibility of different stakeholders, and then finally capturing the role of auditor, which is critical over here. Then we discuss about proactive prevention of fraud, because the concept now is not just prevention and detection, it is kind of prediction, because the data is so high, and the number of issues that are happening are again so high. It's not enough to prevent. You also need to predict what frauds are happening based on the data patterns and based on behavioral tendencies that you see with different stakeholders. Then finally, we cover different types of forensic investigations. What are the opportunities available for professionals in this area? Because today, unlike say 20 years back or even 10 years back, where most of the investigations revolved around financial matters, today you can do investigation on any matter. Let's take few examples which are there in public domain. Vehicle emission fraud, right? And all of you are by now familiar with the vehicle recall policy that came in about 4 or 5 years back in India. There was no concept of vehicle recall earlier in India, but now you have this concept after an investigation was done, and I was personally involved in that case as well, wherein it was found that people were fudging data with regard to the emission that is sort of emanated from a vehicle while it was being sent for testing at the government laboratory, and people are managing that process, manipulating that process. So that's nothing to do with financial area. Similarly, today in the pharma industry, there are a lot of investigations on data integrity that is happening in terms of the data with regard to tests, trials, production, etc. If that is manipulated, again nothing to do with the financial area. Like that, today there are 15, 20 different types of investigations that are being performed where a forensic accountant or a forensic investigator can play a role. So it's important for you to understand those, because you can play a role over there. Then we have gone and then sort of covered close to about 100 odd case studies in this to explain different concepts, including around bank fraud, cyber frauds, etc. So I'll not spend, like I said, more time on this. And this is again just a kind of more detailed elaboration on the highlights. So what we have done is that we also introduced a lot of concepts besides taking the readers through the existing fraud theories around fraud triangle, the dark triad, personality, the fraud diamond theory. So we have created, I think, new theories based on our practical, experience, and also tried to explain in simple way how these, concepts, work. So that's, I think, the part. So I would request those of you who are interested in understanding end-to-end of this, you can, I think, go through the, book. Now I'll go to the main part of my presentation. Today, if we look at it in India, over the last 4 to 5 years, the overall governance process has substantially improved. The process started, I would say, maybe 8 to 10 years, back post Satyam, and in the last 4 to 5 years, it picked up speed. And today, on any financial portal or any financial news channel or financial newspaper, you would find that on a daily basis, some fraud or the other is reported, and some action that is being taken by different agencies is reported. Each of these agencies have become now very equipped, very well, I think, prepared to handle these instances, whether it is SFIO, whether it is Enforcement Directorate, CBI, Competition Commission of India. Earlier, most of us were not even familiar with what Competition Commission of India would do. But now, if you see the kind of action that they have taken in the last few years, first in the liquor industry, then in the cement industry, then followed by, I think, just last week on the tire industry. In each one of these cases, the penalties run into few hundred crores for each of the companies. So that's the, I think, kind of efforts that the investigation agencies are putting in. Similarly, if you look at market regulator, SEBI, the stock exchanges, they also enhanced the processes that they have, including use of heavy technology in order to identify abnormal, sort of behavior, abnormal transactions, abnormal trades, insider trading, etc., and then going after, companies. In all these cases, why I'm emphasizing is they're also asking professionals, what were you doing when this was, happening? So it's not just ending up with, say, a promoter or the senior management. They're asking internal auditors, okay, what exactly were you doing? If you're auditors, what exactly were you, doing? If you are role in a controllership role, what were you doing? If you are involved in a compliance role, what were you doing? So those questions are coming up on the professionals as well. So we need to, I think, understand why these things are happening and try to, sort of detect and investigate those. So if we summarize the environment that we are living in, especially, post-COVID, I would say now, because I would assume that more or less, COVID is gone now, but there are a lot of business practices that have changed over the last couple of years, several for the better, but at the same time, they provide more opportunities to the fraudster to perpetrate frauds. Manipulation of KPIs is coming back into action, wherein people are under pressure to show equivalent or better performance within an industry because somebody else in the industry is doing well. So we need to also show a similar performance. Otherwise, stock market will not treat as well, or the investors will not invest the kind of money that we want to invest, or our valuation will go down, etc., etc. Now, this manipulation of KPIs is not just financial KPIs. It could be production KPIs. It could be quality KPIs. It could be rejection KPIs. It could be any kind of KPIs which are there. It could be at a function level. It could be at a location level. It could be at a sort of a region level, or it could be at an organization level. Accounting frauds, believe me, these would come back into picture now, because like I said, a lot of people will now be under pressure because of the performance that they need to demonstrate, and the pressures that are coming in from different angles on the supply side, on the sort of cost side, inflation side, etc., may lead to situation wherein people start manipulating revenue, round tripping of funds, inventory manipulation, etc. And we are seeing those signs a bit, coming back based on the cases that we are, handling. Acquisitions, like I think Vivek just described, acquisitions are happening at a rapid speed. But if you find that acquisition is with no logic or relevance to business strategy, you might want to, check what is happening over there. Because in the past, what has been observed is that these acquisitions were just to either inflate sales or to inflate valuation, where they are not with any logic or business relevance. So it's not that every acquisition is an issue. And when we discuss in this presentation, what I would want you to sort of keep in mind is that we are discussing exceptions. So it doesn't mean that things generally are bad. Things generally are good, but there are exceptions, and our sort of responsibility as professionals is to pick up those exceptions and address those exceptions. Today, most of the selection in terms of employees or vendors is happening in an impersonal manner through a digital method. So that adds its own sort of complexities. Today there are enough articles that are floating around about employees in services industry moonlighting, which means they are working for more than one organization. In one investigation that we did, we found that certain people were working with more than 3 organizations. In one case, it was 6 organizations that a person was associated with, because a lot of organizations now have this concept of gig workers, where they assign specific tasks to be completed within a defined period of time. So these people are working full-time for one organization, but then taking part-time work with other organizations, and then I think working back with them. In some cases, it is found that they are working in shifts, which means in the morning shift they are working with X company, in the evening shift they are working with Y company. They are not allowed to work as per the contract, but since everybody is working from home, there is no way for the organization, if a person uses 2 different laptops, to identify if the person is working with more than one employer. Now the risk over there to the organization is, an employee, if he is working in a competing organization, then you are potentially sort of using templates, using data and all, and you are exposing yourself to risk. One company that acquired another sort of a boutique organization, they discovered that around 10% of the people that they are supposed to acquire, 10% of their own employees were working with the entity that they were supposed to acquire as gig workers. So that is the sort of a revelation that they got. And believe me, they are not even able to take action, because in the current environment you can't get that many people in the market. So they were not able to take action on all people. They just took action on few people who are sort of running this as a initiative. New employees carrying data from previous employers. So that is again leading to issue wherein a lot of data theft incidents and investigations are happening, where we can play a role. Cyber attacks have increased exponentially. We all as professionals needs to be alert about this, understand the basics, and also where we have the skill sets, help companies address this, because this is happening at a very rapid pace. If you look at work from home scenario, data thefts are increasing, recruitment frauds are increasing, insider trading scenarios have increased. If you see the number of investigations that SEBI is handling on insider trading, number of orders that are coming out on a monthly basis, you can see a clearly uptrend over there. The regulators are super active, both global and local. There are initiatives happening across the globe as well as within India to improve the overall governance mechanism, and the focus is on establishing preventive controls, and also establishing kind of procedures to prevent frauds, and not just on the detection side. So what are the opportunities for us as chartered accountants? So whether we are working inside an organization or working outside an organization, we have different opportunities. So first, on the proactive side, we have opportunities to conduct proactive fraud risk assessment, identification of red flags as part of sort of the fraud risk assessment exercise. Then we have opportunities to conduct proactive due diligences on behalf of clients when they are investing in any other entity, or when they are sort of entering into a substantial contract, or on their vendors, etc., to make sure that they are working with the right vendors, right distributors, right dealers, etc. Then we have opportunity to study the methodology of the scam, fraud, corruption that has happened as part of the various large cases that different agencies are working on. Then obviously we have a opportunity to work on investigation and present a report, either as part of the organization or for private sector or for public sector. I'll in few minutes explain the difference between accounting and investigation. Then we also have an opportunity to sort of help in doing expert advisory services, wherein people need expertise on a particular area, or act as a witness as part of an investigation or as part of a commercial dispute. So we have an opportunity to help over there. So the opportunities are unlimited today, and I feel that going forward, this field will become so prominent that there would be an expectation that in every area that we are involved with, there is a mindset that is, adapted, which is a kind of a forensic mindset. You may not be doing an investigation every time, get into any, specific situation, but you would be applying the concept of professional skepticism and making sure that you're not missing out on significant red flags that might come your way, significant patterns that you might be able to observe from the data. So what is the definition of, forensics? So in simple terms, it is a use of science or technology in the investigation and establishment of facts or evidence in a court of law. So this is, I would say, a kind of a legal, definition. In simple terms, forensics is nothing but use of a very well-defined methodology in order to uncover a fraud, uncover a modus operandi in a manner that you are establishing the facts along with the evidence, what happened, who did it, who all are involved, when it happened, what is the financial loss, what is the evidence available that so and so person did it and this is the amount of loss. Is it happening only at this place or is it happening at multiple places? Did any control breakdown happen while this fraud has happened? So that is the whole sort of concept of forensics. So unlike audit or a internal audit where the focus is on performing defined work steps in order to sort of confirm whether the process is in line with a defined process, whether the financial statements are in line with the accounting standards. In this case, it's an open-ended process to establish facts, uncover modus operandi, and understand what happened, who did it, and like I described, for what period and what is the loss that the organization has incurred and what is the evidence available. The evidence that we gather, if the report is for any external or a regulatory purpose, should be in line with the law of the land, which means in line with the Indian Evidence Act or IT Act in India. So it should be in line with that. There are defined procedures over there. In today's session, I'll only cover in brief each one of these cases, but those of you who are interested can go through in detail in the book where we have described the different procedures that you need to perform while collecting the evidence for different types of evidence: electronic evidence, telephone related evidence, WhatsApp evidence, documentary evidence, vouchers, public domain evidence. How do you do that? Then if you look at forensic accounting, so it's a wider concept wherein in an investigation scenario it's more reactive, in an accounting scenario it's proactive as well. So this is one of the kind of a much sort of a simpler definition that I picked up in a book that is written by Bologna and linguist way back in '95, where they describe forensic accounting as the application of financial skills and an investigative mentality to unresolved issues conducted within the context of rules of evidence. As a discipline, it encompasses financial expertise, fraud knowledge, and a sound knowledge and understanding of business reality and working of the legal system. So in summary, what do you need to have when you are doing a forensic accounting engagement? Either as reactive, where you can call it as a fraud risk assessment, or as a either as a proactive, where you can call it as a fraud risk assessment, or as reactive, where you can call it as a investigation. You need to understand the business, you need to understand the process, you need to understand the controls, you have a good understanding of the fraud indicators within the area that you are handling, you have a good understanding of the financial aspects or impacts of those, and you have an understanding of the legal system, which means the laws of the evidence based on which you will collect documents, information, etc., which will be presented as part of the your report or deliverable. So a forensic accountant is one who performs an orderly analysis, investigation, inquiry, test, inspection, or examination in an attempt to obtain the truth or facts and from which to form an expert opinion. So they focus on application of theory, and that's why the understanding of the fraud theories are important. The theory of fraud triangle, the theory of dark triad personality, the theory of sort of what we created as fence-sitter phenomenon or Robin Hood fraudsters, etc. So it's important to understand each one of these theory. And of course, now the fraud triangle is developed into a fraud diamond theory as well, where there are 4 angles that are presented, where the fourth angle is the capacity angle that has come in. So it's important to understand those. Then it's not limited to accounting considerations and procedures. It goes well beyond that. So a forensic accounting engagement is a kind of a dynamic process, open-ended, and your work steps change at every stage of the process. So you can't sit in a box and do a forensic investigation, unlike you do a audit within a sort of particular box. So for example, when you are doing a audit, irrespective of whether that is logical or not, if it is allowed as per accounting standard, if it is allowed as per the respective law, you just go based on that. But here you would go completely based on logic rather than any legal requirement, except for evidence, of course. So what a forensic accountant does, the accountant uses knowledge of accounting, administration, and business procedures for conducting an investigation or a proactive review, applies knowledge and expertise about fraud to the assessment of documents. So what is important over there is for you to understand what are the different types of frauds and indicators, and we'll discuss that in few minutes. Then you need to have the interviewing skills, because a lot of times the information that you gather and then the data that you gather may not be enough to establish fraud. So you need to use interview as a technique to establish fraud and collect evidence as part of a admission process within an interview. So that's again an important part of the forensic process. So he or she assists in determination of the fraud methodology, the parameters, the participants, and the loss that has happened to the organization or to the government. So in simple terms, a normal accountant acts like a watchdog, but a forensic accountant must be trained to act like a bloodhound, right? So a bloodhound is supposed to sniff what is happening and make sure that they identify how it is happening. So what is a forensic accountant doing, right? And I am describing here in the scenario of investigation, but you can apply that in a proactive scenario as well. So a forensic accountant deals with transactions that are unusual as regard to the time of the day, week, month, year, etc. Frequency, too often, too few, places, right? So for example, you have a cement shop next to your door, but you are buying 5 kilometers, 10 kilometers away from you, or you have a large presence of the raw material within your city, but you are buying from a different city, right? Or only the documentation is moving. So you basically try to identify within the transactions patterns that help you identify transactions which are unusual with regard to any of these parameters. Then you have an understanding the entity's internal controls and weaknesses, because based on that you can identify where frauds can happen and how they can happen. Now here what is important is of late there is a blind reliance on technology. Oh, we have a ERP in place, so it will have a three-way match, plus it doesn't allow duplicate payments. So duplicate payments or a fictitious transaction cannot happen. But time and again we have discovered and investigated and established also that even in a ERP system, it is possible to process duplicate transaction. It is possible to sort of manipulate the data in a way that the system doesn't pick up that it's a duplicate transaction. Add a space, add a special syntax, etc. Or if the test of duplicate is happening within a quarter or within a year, move the transaction to a different quarter or a different year, and then still process the transaction. Similarly, biometric system, people think that biometric system cannot be manipulated, but again, biometric system can also be manipulated by manipulating the resolution, or by assigning sort of 4 different IDs or 4 different thumb impression or finger impressions to a sort of belonging to the same individual, but to different employee IDs or worker IDs, etc. So technology also, we need to understand how it works, what are the gaps before relying that if I have technology then nothing will happen. I have a maker checker concept, but maker and checker are sharing their passwords, so which means the maker checker concept is gone for a toss. So a forensic accountant is required to interview employees, management, third parties, sort of vendors, customers, distributors, etc. Required to perform public record searches. So that's a very important element of investigation today, where you are able to relate a lot of data that is available to you as part of investigation with the data that is available, say, on the MCA side, ROC side, the GST data, the provident fund data, the data in the social media, the data around import, export. So different data you are able to, collate and understand if, say, for example, round tripping of, funds is happening, if you are using related parties which are not defined as related parties for any of the, transactions, or if there are dummy or struck off companies or shell companies that are being used to inflate, sales or to manipulate purchases, etc. EDiscovery is a critical component today, and all forensic accountants should have a good understanding of how this process works. How do you, sort of make sure that you take the right electronic data, which may be in a CCTV, which may be in a mobile phone, which may be in a laptop, which may be on a server, which may be on a shared drive, which may be in a chat, sort of backup, etc. You identify all sources of electronic data relevant to your investigation, and then based on that, make sure that you first preserve it and then analyze it. So it's important to follow the procedures that you need to follow for preserving, obtaining, reviewing, and then presenting this data. There are clearly defined procedures in the IT Act and the Evidence Act, which needs to be followed. Otherwise, it will be considered as tampering with the evidence. So you have other sort of sources. You need to keep thinking, what are the different sources from which I can get the data relevant to my review. It could be attendance record, it could be security register, it could be email files, it could be diaries that people are writing, it could be the calendar entries that are there, day planners, anything. So when you are doing an investigation or a proactive review, you should first think, what are the different sets of data and the data sources that I need to tap into in order to understand the whole picture on a particular matter. So these are some of the examples that you pick up. Practical example. Let's say you're doing a recruitment fraud, and I have not picked up a standard procurement fraud over here, because that I'm sure most of you are familiar with. Today recruitment fraud is a critical area for companies. Now I'm picking up over here how you can do this in a proactive way, not just on an investigative way. Of course, all of these apply to investigative scenario as well. But let's look at, you got a company which recruits, say 500 people per month. They recruit 6,000 people in a year, and you have been given a data to identify if there are any potential fraud indicators that they could have identified as part of the process, but they couldn't, and then people joined the company. You take that data, then start analyzing that data. You find that age of the candidate as reflected on the CV does not correspond with the minimum age that is required for a particular qualification or degree. Today in India, if you have to clear BCom, you need to be 20 years. If you have to clear CA, minimum 21 years. Or if you are an engineer, again, minimum 21 years. There will be some exceptions, but generally that is the process. But you find that is not happening. There is a gap in the work experience profile. They do a lot of tests, communication test, aptitude test, etc. The test scores are exactly or near about matching with the minimum threshold or passing marks. The candidate is recruited without any business case or requirement. We already have 10 people sitting on bench, but we are recruiting another resource. They are recruiting a candidate from a source other than the regular source from which candidates at that level are sourced. For example, recruitment of a newly qualified candidate from a recruitment consultant and not from a campus, and you are paying a fee to a recruitment consultant, whereas there are enough people available from the campus recruitment at that level. Intentional elimination or manipulation of quotations to favor certain recruitment consultants and vendors. Then revised quotation obtained only from one recruitment consultant and not from others. The quotation from a particular recruitment consultant is always the last quotation received as part of the process. Then you find that there are inconsistencies in the dates. Approvals are obtained from a person other than the person from whom it is obtained in a normal course. Unusual volume of business given to a particular recruitment consultant. Then a vendor which is rejected earlier is awarded a contract. The vendor comes back in a different name. So like this, you basically identify fraud indicators in a defined area and identify which transactions you will do next level of review. What is important over here is to understand and appreciate the fact that just one or two fraud indicators or red flags doesn't mean that there is a fraud. You need to pick up those examples for detailed investigations or detailed review as part of a fraud risk assessment where you find multiple red flags. So here, for example, there are 20 red flags indicators that are identified. So you will pick up those transactions where let's say there are 20 transactions where each of the transactions is having more than 5 such indicators, qualifying more than 5 such indicators. Then you pick up those for the next level of review. So now let's go to the sort of the practical aspects of how a investigation happens and what are the sort of steps that you take in an investigation scenario. The first step that you would do is understand the background or understand the allegations. In India today, 9 out of 10 investigations starts with a whistleblower complaint or the allegations or a suspicion that the management or the respective stakeholder has. So first gain a full understanding of the allegation. Then second, and we'll discuss in detail. I mean, that's the whole part we'll do in the next 30 to 40 minutes. But I'll just first summarize over here. Immediately, you need to identify what evidence to preserve. For example, if CCTV is a critical component of evidence, please make sure that that is immediately preserved, because CCTV data is normally preserved only for 15 to 30 days because of the size, and it gets overwritten. So you understand what evidence you need and then preserve that immediately, both electronic as well as non-electronic evidence. Then interview people. Now this interview is not an investigative interview, but it is a preliminary interview to understand the process, to understand what happened, etc. Then you review the underlying document supporting or refuting the allegations. That's again very important. You need to be independent. You need not just think that the person against whom the allegation is there is guilty to start with. You need to presume that you need to identify facts, identify evidence that may be either supporting the allegation or not supporting the allegation. It's proving the other way around. And then ultimately at the end of the day, once you have both the sides available, you decide whether there is a fraud that has happened or not. Then you obtain electric evidence, consider need to re-interview or conduct additional interviews, then analyze the evidence and develop your findings, present findings to the management, and then you need to also determine to who all the report would go, and then what are the remediation methods that you would take care of. So this is the broad sort of summary of the steps that happen. In the book, again, there is a detailed explanation of each of these steps, as well as the tips that you can use while you perform those steps, and some of those we'll discuss in the next half an hour. So what do you do? Basically, you first understand what is the nature of the suspected irregularity or the alleged irregularity that has happened. So what is somebody saying? Somebody is saying that there is a conflict of interest between a vendor and an employee, or a vendor employee has made money, or there is a revenue recognition issue, there is a dumping issue, there is an inventory valuation issue, there is a physical inventory which is missing. So understand the nature of the suspected irregularity. Understand what is your objective. That is very critical, and you need to define as part of your scope or the charter or the engagement letter, depending on whether you are doing an internal or an external investigation. You need to clearly define that what is the objective of the investigation. Then, like I said, you need to preserve the relevant data. Sometimes people think that there is no need to go and visit the desk of the alleged perpetrator, but in a lot of cases you find evidence. People have written notes, people have draft documents, people have quotations that are lying over there which have not been submitted as part of the process, or invoices are sitting over there which have not been submitted for payment, and there is a money that is being demanded from the vendors, etc. So all those things are available. So make sure that you capture all the data that you need, and then collect that data and preserve that data. You may not use all of that data, but you need to preserve that data because it may not be available later. Then develop the entire background profile of what all is available and what you need to do. Agree on the objectives that have been defined with the whoever is your sort of stakeholder, audit committee, board, management, regulator, enforcement agency, whoever it is. Then agree on the reporting and independence protocols. This is also very important because forensic reviews are confidential reviews. So you need to be clear when you will report, what you will report, and to whom you will report, and who would be aware of the process and who will not be involved in the process. In most cases, the investigative process happens in a manner that only 2 or 3 people are aware, and they only are updated with the details. Then when you develop your approach and work plan, consider who could be the likely perpetrators and what could be the modus operandi that is adopted. That is the reason why you need to understand what are the past cases that have happened and in that area, and then how sort of frauds can happen in that area based on the controls that are there or the processes that are there. assess the range of known or unknown loss. So understand your boundaries. If it is a sales related issue, understand how much sales we are talking about, different types, segregate between where issue is not there. If it is export, import, the allegation is on import, domestic and export, allegation on domestic, so alienate export. So like that, you identify what is the potential, of the fraud that we are, talking about. Then develop your work plan. This work plan should be detailed, but like I explained earlier, the work plan has to be revisited on a continuous basis because it's a very dynamic process. You may start in 2-3 different directions to start with, but then determine that one particular direction is actually yielding the right results. So then the whole team will focus on that direction and ensure that that is completed, faster. Then develop the sequence of activities. What happened, how it has happened, how it was, discovered, when did that person came into this, role, when did that vendor, was onboarded, is there a background to the vendor and this, individual or the distributor, whatever, it is there. I'm just giving you these simple examples, but in the given scenario, depending on what you are doing, you need to create a picture where it is clear that how was the situation that was prevalent in terms of the various actors in that scenario. Now, based on that, you need to determine which team will work on the project. Now, you may have a scenario wherein it's a very specialized area. Say you have to do a treasury fraud investigation in a banking scenario. Now, treasury in a banking is a very complex, subject. Or you need to do a commodity, fraud investigation, again a different kind of a subject. Or you need to do a kind of a review of utilization of steam in a boiler. You need to understand that concept. So depending on the area that you are looking at, you need to pull together a team that consists of, say, somebody who has an overall understanding of the business and the process. Then within that, you have each of the experts, somebody who understands accounting, somebody who understands the relevant technical area, somebody who is IT expert, computer forensic expert, etc. So you need to build a team that would be suitable to the given engagement. Now, in some cases, you might have to even use external expertise. So you should not shy away with that. In fact, most of the agencies now, we work back with them and we advise them. And today, they form a multidisciplinary team to do the investigations. And it's not just one team that is working on that. There'll be lawyers, there'll be forensic investigators, there'll be bankers, there'll be industry, expert, etc. They'll all work together in that particular, investigation. So when you start the investigation, you should develop your hypothesis. What is the hypothesis? What could have happened? How it could have happened? Who may be, involved? What controls could have been, misused? Where you could, find evidence. Now that is very important. So development of hypothesis is as important as development of work plan. And in fact, even hypothesis, you need to keep revisiting at every stage of the process. So based on that, you do a preliminary review of the documents and information, identify possible collaborators or involved individuals, conduct preliminary interviews of the suspected individuals, not as a kind of a forensic interview, but just to understand what they do, how they do, and have they, encountered any issues, etc. So it's a more of a smart process to collect and get information from their body language, etc. Then build different case tracks based on the traces collected, and then conduct follow-up, interviews with them. To start with, you continuously do these steps, right? Wherein you continuously summarize the findings and quantify loss wherever possible. And if you are especially doing a large investigation, you need to do this almost on a weekly or a bi-weekly, basis, so that you are having a tab on where this investigation is, moving. Then regular status report on the progress to your stakeholder that needs to, happen. Now the next part is making sure that all the evidence, earlier we have collected information. Now that information needs to be converted into evidence, which means if you have collected a laptop, you need to identify from the laptop the relevant Excel file, relevant quotation, relevant email, relevant backup document, relevant kind of say agreement that was there, or a property document that was there, or a return was whatever was there, or a bank statement that may be available on the system. So now that becomes your evidence, which you need to identify along with the source. Then identify the accounting proofs, and which would also include identifying data from the ERP systems or any other system like a CRM system, etc. Then finally, you need to report results, which is basically summarize the results. Now the reporting, how you do, will also depend on to whom you are reporting. If you are reporting to a court, there is a particular process that you need to follow. If it is an internal report, then it can be a slightly more less elaborate process that you can follow over there. And we'll discuss the again the format of this over there. And after you are done that, especially if you are doing for an organization, you need to also capture way forward. What is the action that needs to be taken? Is there a litigation that needs to be launched against the employee or the third parties? Do you need to recover the funds that have been siphoned out either by the employee or by the third parties or by another sort of entity, etc.? And then what are the recommendations for improvement in the processes and controls to improve the process, and then submit the report. So this is how broadly the process works. I'm sure there is a detailed workshop happening. So, and plus you can go through the book as well. At each stage, there are certain nuances that you need to follow. The book would help you understand those nuances and then do practical methodology. To give simple examples of some practical tips. In let's say in most cases you'll not get all the information at one go. So how do you work on the information that you have received and not just worry about the information that is not received? Because in most cases, people are just waiting for the information to sort of come and then start the work only after that. Now there are two important concepts over there. First, before you start the work, making sure that the information that you are starting working on is comprehensive to the extent it is available, which means if you have got a sales register, match the total of the sales register with the financial statement number so that you are working on the right sales register. But sales register has only 8 columns instead of additional 2 columns that you need. Fine, you will get those 2 columns later, but at least if you have 8 columns, start working on those 8 columns and how to analyze that 8 columns. So what are some of the potential complications that would typically arise in the investigative process? In most of the cases, the issues would be around people would want to get away with this, get over this very fast. You will get appointed and say every week people will come and ask, did you find something? What is the next step? What do we do? Our quarter end is coming. We need to report the results, etc. and all. So there will be a lot of such requests that would come in. Management board always will be with a desire to get back to business. So guys, yeah, there is an issue. Let's complete what needs to be done, but let's get back to business because I don't want to sort of go after that. Who will pay for the fees? This comes especially in a regulatory scenarios. Who will pay for the fees? Does the agency pay your fees? Does the banker pay your fees? Or who will pay your fees? And if it is a investment scenario, then would the target company pay or the investor will pay? If there is a dispute between the investor and then the company, then again who will pay? So those are again complications that arise. What are the disclosure obligations for the company? Again, the company will ask you. And today there are disclosure requirements in India captured in detail in the book. But in summary, if there is a forensic audit or an investigation happening, SEBI has used the word forensic audit. So I'm again using that word for that sake. Otherwise, I would call it as an investigation. So whenever any forensic sort of investigation is initiated under specific scenario as described under the notification issued by SEBI under LODR along with the FAQs, in those scenarios you need to report that to the stock exchange. Similarly, if there is a fraud investigation that is happening where the fraud relates to a KMP or if it is a material fraud, you need to report to the stock exchanges. And then in certain scenarios under the new BRSR report now, you need to report those as part of the BRSR report if it relates to corruption, if it relates to conflict of interest, if it relates to competition commission related action, or if it relates to some data theft or data privacy related action. Then what will happen also is distraction that happens because whenever investigation is happening, a lot of management bandwidth is going over there. So there will be a lot of distraction. Now why that is relevant to you is that because your investigation will lead to some distraction, management will keep coming back and saying that you guys are disrupting my business. So you need to know how to handle those situations. What will be the reaction of the external customers, stakeholders, etc. if this comes out in public domain? Availability of records is a big issue because that depends on the document retention policies, access to seized records if they have been seized by some other entity. So you have those scenarios. This comes in especially in a lot of bank forensic audits, because you want to go and do audit, but the target entity is not providing the data, or the data is already shared by already seized by some other agency, either income tax or CBI or ED, etc. Then how do you do an investigation in that scenario? Then slow pace of many investigations, because it just keeps going on. Then you will have the external auditors in that scenario every quarter again asking questions, because now under the new CARO they have a requirement to report. So they would be asking questions around, is it a material issue, is there some KMP involved, is there any indication of significant control failure, etc. So that also has to be addressed as part of this process. Then the concept of privilege, attorney-client privilege, where it is as per the law, if there is a privilege available, then you need not disclose those findings to anybody. But then under Indian law, there are again, it's a complex subject. There is a detailed chapter on this subject written in the book by a senior partner from AZB. So you can, I think, go through that. But in simple terms, if you have a situation wherein you need to retain the confidentiality of a investigative process, then you need to appoint a law firm who would act as a kind of preventive process from a privilege angle, wherein you need not disclose that data to everybody that comes and asks you. At the same time, if a regulator asks, in most cases you have no choice but to submit the investigation outcome. Then what are the typical time frame? Now each investigation is unique. Some investigation may last for 2 weeks. Some case may last even for months, and I have done investigations which have lasted even for 2 to 3 years, because the issue just keeps expanding, and you start with one location, it expands to another location, it expands to another geography, another country, and especially areas around revenue recognition, areas around anti-bribery, etc. These investigations can go on for long, but typically majority of the investigations that happen, especially in a corporate environment, get over between 3 to 6 weeks, depending on the specificity and credibility of allegations. If the allegation is very specific, provides the details of where it is happening, what is happening, who is involved, the time frame when it has happened, etc., then you are able to finish faster. But if it is very broad, then obviously it takes 1 to 2 weeks to first shortlist where you want to dig deeper, and then it takes another 3 to 4 weeks to do the initial investigation, and then based on that it may take few more weeks. Then it also depends on complexity of scheme, number of people who are involved in the scheme. If it is just one person, then it is easier. If there are more than one people involved, then what will happen is the controls and the process and the documentation will look perfect. So you need to actually dig deeper and deeper to identify what is happening. Then amount and availability of evidence and documents, like I explained earlier, this actually determines how successful you are in terms of establishing the evidence, establishing the facts with evidence. Then availability of witnesses. In some cases they may have retired, they may not be ready to cooperate, the vendor we are discontinued, or the employee who was interacting with the company at the vendor has left, etc., etc. They may not be available. Then if it is a investigation where already regulators are involved, enforcement agencies are involved, it becomes more complex. Then cooperation of different stakeholders, which also includes the process owners, external parties, etc. That again determines. Some short as days, like I said, and some can take years. So how does a day in the life of a forensic accountant looks like? So you have to sort of keep searching for the smoking gun, a needle in a haystack. Earlier when I started this career, people used to say that it is an art. By nature, you, Sandeep, you have this art. That's why you're able to crack cases. But I can tell you that it is a science. It is not necessarily an art. You just need to develop that professional skeptical mind, and you start looking at things in a particular way, in a very methodological manner. You would be able to solve almost all the cases that come your way. Then interviews. This is a critical aspect. You need to keep circling around the target. A lot of times it's basically who blinks first. Some interviews that we do go on for 8 hours, even 10 hours as well. Nothing comes out in the first 5-6 hours, and then I think information starts coming up later, and then you need to continue. So there the concept is, how do you make sure that you are well prepared for the interview and you have patience to go up to any length, of course within the legal parameters. For example, you can't do interview beyond the office hours, etc., and all that stuff. but you have to have the patience to make sure that you are not blinking first and then the perpetrator is blinking, first. Then you need to, sort of understand the timelines, flow, prepare a kind of a chronology of, events, and then link the evidence with the, events. You need to also do a lot of research while you're doing it in the public domain, understand what is happening in the industry. Of late, we are seeing that, especially in the last 2 to 3 years, like I described earlier, there's a lot of data that is available in public domain, which we can use as part of the, investigation. Then where you need to, sort of discuss is, does this investigation require a written report, or it's an oral submission? Is it a high risk? Is it a low risk, engagement? All that determines the process that we would follow. Then how do you, issue progress, reports to the audit committee, external auditors, and not necessarily, management? How do you manage crisis? Now, when you are doing an investigation, you will face a lot of crisis situations. To give an example, somebody, while you're doing an interview, can stand up and then say that, and then go out and say that you are harassing me. And, sort of, I'll file a criminal complaints against you because you guys are harassing me. So you need to know how to handle that, crisis. You go on the ground, assuming that XYZ data would be, available, but that data is, not, available. You have put your entire thought process around that, but that is not available. You need to immediately think through what is the, alternate data that is, available. Now you do your entire review. You are not taken the evidence on a daily, basis. And after 10 days, the perpetrators realize that something is happening. They may destroy the, records. Now, how do you handle that crisis? So a forensic accountant over a period of time also learns how to manage situations that would arise during the course of the investigation in a way that people who are trying to divert the investigative, process, you are able to bring it back on track without getting into the, sort of the scheme that they are devolving to take you into another, route. So diplomacy is very critical in doing an investigation. You should be, neutral. You should be factual. You should be smart to make sure that you're not getting carried away either ways, where people are trying to, sort of divert you. This, I think, we discussed in detail, so I'll not spend time. I mean, a lot of records are available, today, including motor vehicle records, litigation records, partnership, records, social media records, etc. In several cases, the motor vehicle records, the EOHAN database has thrown, examples of how people, have been traveling heavy goods in autos or two-wheelers or, others, whereas it's being shown as, trucks. And now with the e-way bill, review of that data is again helping you understand whether the goods were actually dispatched or not dispatched, or only, sort of invoices are booked in the, system, but the goods are not, dispatched, because e-way bills are of a completely, subsequent date. So it is impossible to know everything even after investing time, energy, and resources. It is important to understand that never you can say that you are able to identify every penny that is lost by the company, every, sort of issue that is existing, because given the time constraint that you have, given the evidence constraint that you have, given the, kind of the data, and then the availability of evidence constraints that you have, you'd never be able to identify everything that comes in. So we should always present that appropriately, saying that based on the work that you have done, based on the limitations that you have as part of the investigative process, this is the finding, that is there. Now, there are some important tips that are there. You should always look before you leap, which means don't get super excited and get into only one angle before you have confirmed that angle. The unasked questions cannot be answered, which means that you should have appropriate questioning skills and not assume and presume things. You should actually ask the questions and get the answers, both as part of the process understanding interview as well as part of the formal interview. A lot of times people think that they have the evidence and they need not ask questions in the interview. But as per law, as per any process, even if you have 100% of the evidence, still you need to give the opportunity to the other side to explain and to respond to that gap that you have noted or the question you have before you can sort of submit as part of your report. If you are not doing that, that means your investigation process is incomplete. Information must exist to be discovered, which means if you keep going back and telling that, if CCTV data is available, then I'll do it. Please get me CCTV data of 6 months back, but that data is not available. Or please get me telephone records 2 years back. It's not available, because telephone records in today's context at best are available for 6 months, and not before that. As per the law itself, they are available only for 6 months. The truth cannot be invented. It can be discovered and it can be presented, which means you can't go with a prefix mindset that there is an issue or there is not an issue, and you should not go with the concept of the person that you are investigating or the behavior of the person. You should rather stick to the facts. Knock on the doors, which means continuously keep looking for the data and then not give up till you get what you need to complete your investigation. Now let's look at why audits, either internal audits or statutory audits, are normally not able to detect even large scale or long duration frauds. The first thing is perceptions about promoter or management. Oh, this promoter is so good, religious, does so many donations, does so much of good work, always well behaved, always well receiving, etc. and all. How can so that person do the fraud? Now that is one of the biggest reason why a lot of frauds have not been discovered over a period of time, because people go based on personality. It could be the promoter, it could be the management, it could be the procurement head, it could be the recruitment head, it could be the sales head, it could be anybody. So don't go by the personality. As different theories have shown, the personality type need not lead to a situation wherein a person of a particular type will never commit any fraud. Given a situation, anybody can commit fraud. That is how the fraud theory works. Then silo approach rather than comprehensive review, which means that there is over a period of time, all of us have become more like a specialized unit. Somebody in an audit who is doing purchases is doing only purchases. Somebody who's doing sales is doing only sales. Somebody who's doing bank reconciliation is only doing bank reconciliation. But there is no horizontal review, which means nobody is looking at a end-to-end transaction, how it is happening. Everybody is looking in a very siloed way, a particular sort of set of a particular part of the transaction for a defined period. You actually need to do a matrix review, both horizontal as well as vertical, if you want to detect any fraud indicators. Otherwise you can't detect. The audit procedures and protocols are well known to the client or the target or the sort of company management, etc., and they are predictable. They know that you will pick up sample only from this period to this period. They know that this is your value threshold, so you would pick up your sample or area only from that period. They know that you would not go to a remote plant, you would go only to the X plant, so we can do what we want to do at a remote plant, because today nobody will take the effort to go over there. They know that during COVID, nobody will come for physical verification, they will rely on what we are doing. So I would perform those sort of issues or fraud over those areas. So they are fully familiar with what you are doing, and that is how the frauds are perpetrated. Now again, when I am talking about all these things, it could be at the promoter level, it could be at the management level, or it could be even at the process owner level. So the process owner is pretty much aware what an internal auditor will do, what an external auditor will do, and they devise their scheme to make sure that it's not detected as part of the internal audit of the statutory audit process. Undue reliance on internal controls without testing efficacy and presuming them to be sound. Like I said, the maker-checker concept, duplicate payments, etc. and all. There is a reliance that is placed without actually testing whether the controls are working in a stressed scenario. Then reliance on random sample of transaction, lack of in-depth review of those sample transactions. Like I said, again, vertical rather than end-to-end review of a transaction. You have the same party appearing in purchase and the sales. You are purchasing from the same party, selling to the same party. Yeah, in some industry it is possible where you are doing trading, but in most industries that is not relevant. And in those cases, whenever investigated, it is found that only invoices are moving. There is no physical movement of goods that are happening. So through round tripping, you are just increasing your sales and profitability. Then lack of time, undue focus on timeline and then due date. So the team lead is always focusing only on due date. 2 days before the audit is supposed to be signed off, a junior person comes up with a potential red flag or an issue. Then the person is saying that, oh, why did you come at the last moment? In 2 days we have to sign. What will the management think if we go now? So we can't take it now, so let's take it to the next quarter, right? So that is the reason why it's there. Now it doesn't matter when you are getting the red flag. If you get red flag, better, sort of you go and address that. They're not familiar or up to date with the latest, frauds that are happening in the industry. That again is very important. Understanding of the frauds that are happening in the industry is very critical, because what has been experienced is the methodology doesn't change substantially between the frauds that have happened. If you look at the history, if you look at the revenue recognition or the accounting frauds that have happened right from the Enron time to the recent cases that are seen, broadly the methodology remains the same, with some changes here and there that happens. So what are the different red flags that you watch out for when you are doing a proactive review, especially, or even if you are doing a audit? If you find an aggressive management attitude towards financial reporting coupled with consistent growth in your results, they are always known to be most creative in accounting. Being creative is fine, but going beyond creativity to be aggressive is an issue. Operating margins are significantly different than normal industry trends, which means that generally we tend to believe that our client or our company is different than others. We have a different strategy, etc. Perfectly fine, but at least audit and then see whether that is the case, or there is some other reason why the operating margins are significantly different than the normal industry trend. In industry, most of the other players with similar profile, etc., are giving a, say, a EBITDA of 15%. You are giving 22%, 23%. Understand how that is happening. Is there a sound business reason, sound logic, or there is something else over there? If there are frequent changes in the key managerial personnel, especially CFOs, that's a red flag. In today's context, if there is a consistent change or a resignation of independent director, that is obviously a red flag. Failure to rectify repeated weaknesses in controls reported by external or internal auditors. This quarter is detected, we'll do it next quarter comes. No, don't worry, we'll address it in the next quarter. Then what happens is that it becomes so wide that it then sort of, whenever it is discovered, it's very difficult to handle for everybody, including company or the auditors. If there are large number of related parties, either as employees or as vendors or as distributors, dealers, etc., that's another red flags that needs to be watched about. Then no independent review or approval of transactions related to the promoters, CXOs, etc. There is a gap that is noted in a let's say a invoice or a bill or a reimbursement document submitted by a CEO, but you are reluctant to go back and then talk and then try to put that in a material concept, saying that materiality concept, saying that why should we go and ask to the CEO? But that one transaction could be an indicator that if a person can do some inappropriate act as part of a personal small transaction, then person can do at a company level as well. That should be the thought process, rather than thinking that it's a small transaction, so let's leave it and let's not raise it because it will not look good. It's a large company. In fact, it should be the other way around. The senior the person, there should be the lower materiality threshold for non-compliance. Evasive or inconsistent responses to questions. Oh, you guys don't understand how the business works. You don't know how business operates on the ground. You're all theoretical. You don't know how things work. Come on this side, then you'll understand. All those are normal standard methods that are used to push you into a shell so that you are not able to ask the questions that you need to ask. Significant acquisition activity without adequate justification. We discussed this earlier as part of the current process as well. Then rapid growth or unusual profitability, especially compared to that of other companies. Recurring negative cash flows from operations while reporting earnings growth. Now, this is very important. We are showing continuous earnings growth, but there is negative cash flow that is happening. So how is that possible? In some scenarios it is possible, but in most scenarios it is not possible. Recently also there are cases where it is discovered that the company is showing that they have 1,000+ crores sitting in their 1,000 crore plus sitting in their bank accounts, cash account, current account, etc. But at the same time they have 2,000 crore of high sort of interest debt, but not discovered over a period of time. And then later when it is discovered, it is found that that cash or that the amount doesn't exist. Then significant transactions with related parties. There are significant volume of sales to entities whose substance and ownership is not known, like the shell companies that we talked about. Now, what is important is that whenever we identify a red flag, don't push it with the concept of relativity or materiality. I picked up the statement made by Albert Einstein over here. Relativity applies to physics and not ethics. So in ethical scenario, even if it is a small issue, you need to understand the bigger implication of that issue and not push it under the carpet saying that it is not material. I'll give you a classic example of bank reconciliation, where earlier bank reconciliation was considered as a method to detect frauds. So even like when I did articleship 25 plus years back, the concept was that even if you find few paisa difference in a bank reconciliation or any other similar reconciliation, you are supposed to identify why that reconciliation happened. Is there a bigger issue around that? But of late, that is not happening. In all reconciliation, the concept of materiality is applied, and then people say that, oh, if it is not material, put it under suspense or put it under balancing figure and then move on. That's actually a wrong concept. You need to identify, because reconciliation is a good control to identify if some fraud is happening, whether it is customer account reconciliation, whether it is vendor reconciliation, whether it is the bank account reconciliation, any of the reconciliations that we are talking about. It is important to sort of go to the last paisa to confirm that what is happening. So what are the common fraud techniques? Overstating of revenues and assets. These are simple. I will not spend too much time, but this is how it happens. Again, fraud is not that complex. There are only limited methods in which frauds can happen. We need to understand those methods, understand the underlying factors that lead to those frauds, and then go after them. So you can actually manipulate at a company level by overstating revenue, overstating assets, understating expenses, or understating liabilities, creating offline reserves, related party transaction, big issue. That's why SEBI has come up with the revised guidelines on reporting of related party transactions, spurious assets and hidden liabilities, undisclosed liabilities, smoothing of profits. This is interesting. A lot of times people look at only those angles where there is over reporting of profits, but there are also investigations where we are done where there is under reporting of profits to demonstrate a consistent delivery of results, which means that this quarter I have actually earned 26% EBITDA rather than 20 to 23% because of various reasons. But what I would do is that I'll manage that the 3% is not recognized now, so that next quarter, if I have some issue, if I'm not able to do 23, I can use that 3% over there. So that is called padding up of the balance sheet or smoothing of profits, so that there is a consistent profits or the EBITDA that is shown rather than fluctuating one. The concept of again channel stuffing, I think in today's environment, I think it has substantially reduced, but still can happen in different ways. So you need to be aware. Booking of sales that are not really finalized. Your accounting policy says that you need to sort of account for revenue after the goods are dispatched. So what you do is that you have a factory and you have outside go down, and then you move the goods from the factory to the go down. So from factory it has moved out, but it's lying in the go down, but nobody is checking that, and it's shown as goods in transit. The sales recognized. Not making adequate provision for doubtful accounts receivable, giving a logic why it is not required. Capitalizing expenses that should have been charged to the current year, because they want to again show profitability. They come up with a concept that it can be capitalized. It's an innovative accounting. You guys don't know how accounting works. I'll give you an example in the infra industry when all these things were happening, where the infra companies were actually valued based on the order book, especially the EPC companies. They are valued based on order book, not based on the actual EBITDA or the profitability, because that was anyway lower. So there people came up with a concept of recognizing revenue based on probable acceptance of claims. So all these companies used to have huge claims with the customers. Normally, most of the customers were government as well as NHAI, and then others, state government or federal government. In most of those cases, it used to take time. So they came up with the concept of probable acceptance of claims, but there is no concept of probable acceptance of claims, right? There is no concept of recognizing valuation based on order book. And how that order book was sort of developed. I receive a contract for 100 crores. I give it to next person at 99. That person gives a back to next person at 98. So at a industry level, instead of recognizing 100 crores, now you are ending up recognizing at 297 crores because each one is recognizing in their order book, and then suddenly the order book becomes huge at an industry level, and that's how the valuation in terms of the market perception was happening. Acquiring another company whose current profits are high and consolidating its income with the firm's income at the year's end, but again the logic doesn't exist. So how do you sort of normally get to start an investigation or a review? Globally and in India as well, now it is proven through different surveys and then different data that is available, more than 40% of the frauds are detected through tips. To be precise, the last ACFE report says that 43% of the frauds are detected through tips, and majority of those tips come from employees, former employees, and several of them as well from vendors, customers, suppliers, etc. Or it could be through the process of proactive intelligence that you gather, which is called mystery shopping. Let's say in the banking industry, it is a very commonly used, where people go on the ground, try to sort of process a loan file by giving incorrect data, etc. and all, and then see till where it ends. The same thing can be done in other areas. So you gather intelligence on the ground in terms of what is happening, and based on that, then do a detailed review. Then suspicions of security and law enforcement agencies, if they have found some abnormal pattern, and then that leads to investigation. If there are system control violations, especially continuous system control violations or internal control violations, that may lead to fraud. Internal audits several times have been able to identify red flags as part of the internal audit process, and that has led to investigation. In some cases, I mean, while the expectation that it should be more, but in some cases it is the external audit which has identified, and in several cases it is just by accidents or chance. Some rule changes, some process changes in the company, somebody goes on leave, and at that time it is discovered. So it's just by chance the fraud is discovered. So as a forensic accounting professionals, I summarized this earlier, so just to repeat, you need to understand symptoms of fraud if you want to detect proactively what frauds are happening. Right now, a symptom may be defined as a condition which is directly attributable to dishonest or fraudulent activity. It may result from the fraud itself or from the attempt to conceal the fraud. Then managers and auditors interested in operating controls need to be familiar with what can go wrong in the areas they manage, audit, or investigate. They need to know what symptoms may be reflected in the books, records, accounts, documents, reports, reconciliation if something does go wrong. So which means you should be able to identify patterns in any of these. And in fact, you should be able to identify the symptoms in the behavior of the person as well. Somebody leaving beyond his or her means, somebody not taking leave at all, somebody not willing to go to a different location for a promotion, right? Even if somebody is promoted and on a condition that they move to a different location, they will say that no, I don't want to go. They will not go on leave at all during the year. Even if then they go on leave, they will carry their laptop and they would only process the transaction. All those are the symptoms that you need to understand. Some examples are missing documentation, shortage or excess inventory found, excessive refunds, excessive widening of transactions, incorrect totals, goods purchased are in excess of needs, invoices are on plain paper, not pre-printed forms, letterheads, no tax number, invoice is there but tax is not there, TDS is not there, etc., etc. Payees have common names and addresses, address change followed by a immediate request for payment, then application of a dormant account, and then processing of payment over there. Then goods and deposits are in transit are growing, right? So you have these goods in transit and then that's growing. Back-end adjustment. So it is important to look at the logs. In most of the systems now, logs are available. So you need to see the logs to identify if the entries are passed at the back-end in the centralized level or it is being passed by the person who is supposed to pass. Invoices are duplicates or copies. Then top performance by suddenly a person has joined and the performance is very high. Then copies are available where originals are expected to be there. So I think with that I come to the sort of end of the sort of presentation. Of course, I have case studies and all these are all described in detail in the book, but I want to leave enough time for Q&A, And if we have more time, then we would, go through one of the case study. But since it's already 1.5 hours, Vivek, if you're okay, we'll open the floor for Q&A.
Anyone having any question can write in the chat box. In the meantime, sir, if you can take some practical case study, like if someone wants to have a pre-forensic, or if someone wants to, like a buzzword is there of forensic, and if a mid-sized practitioner gets a work that you please come and see whether any fraud is there or not, then if you can give a brief walkthrough how they should go away, move forward, or how they should start.
Sure. So let me give you a simple example, right? So let's say a client comes to you and says that in procurement, I believe that one of the procurement manager is involved in a fraud through a particular vendor. I don't know exactly how much money they are making and how they are making, but I am getting hints. And I'm also getting messages that these two people are hanging out together, and they are even sometimes I see them traveling together to the office, both while they come and then go back, even though the vendor sort of location is slightly away or not on the route. So I believe something is happening. Can you come and sort of do a preliminary review to start with, and then if you find something, then you investigate. So that is typically how a normal process starts. So in that scenario, you would first start with understanding what all areas this individual is handling. When did the individual sort of start in the company? What is the individual's role? What is the organization hierarchy? The person is coming from what background? When did the vendor came into picture? Was the vendor brought in by this person itself? Is there any spike in the transactions with this particular vendor after this person has taken over this role? Then you would collect all the transactions that are happening with this vendor to see a pattern in which the transactions are happening. For example, though the vendor is a competitive vendor selected through a competitive process, but out of say 10 items that are supposed to be procured, all the high value items go to this vendor, all the low value items go to other vendors. So you are trying to show that it is common, and you are able to help all the vendors, working with all the vendors, but the reality is you are supporting this vendor more. So what you would do is first understand the full picture about the vendor, about the person, the nature of transactions that are happening. In fact, in most of these cases, you would do that even before you arrive at the scope of work or a engagement letter. You will spend a day or two to do this exercise. Once you have done that, then you define a broad scope of work, which will basically consist of the 5 stages that we sort of discussed earlier. To start with, sort of preliminary analysis of the data. Then you would say that you would analyze the data and identify a sample transactions, and then you would review those transactions, and then you would do any interview that is required, and then you would report. So that's how you structure your engagement letter. Again, in the book we are given a sample engagement letter both for fraud risk assessment or for investigation, how an engagement letter should look like. So that is captured in detail, and how do you capture different work steps is also there. So once you have done that, then you first arrive a boundary, because nobody will be willing to give you a huge mandate to start with. Even when we do projects, typically all projects when they start, they are all between 5 to 10 lakhs projects, because nobody is ready to give you a large mandate because they are not sure what will come out of that. So you need to also scope in a manner that you are creating a boundary of what you would do. The boundary would relate to the area that you would look at, the location that you would look at, the vendor that you would look at, the period for which you would look at the data, and the sample size for which you would look at the sort of detailed review. Once you have done that, then you pick up the data and then analyze the data. Now where the suspicion is very strong, then the dual process starts at stage 1 itself, wherein you are looking at the data as well as you are picking up the electronic data, which is the emails, and then whatever backup is available on the server of the employee, you are picking that up and then reviewing that parallelly. So you are reviewing in the electronic data whether there is any indication of favoritism to the vendor. For example, you find that the quotation pertaining to other vendors is forwarded to this vendor, so that that vendor can submit a lower quotation or appropriate, sort of quotation. So you find those, evidences over there, or you find that both of them are gone on a holiday, together. So you look for evidence of closeness between the, your individual as well as the external, vendor. In the transaction data, you look at, pattern in the transaction data and identify anomalies in that transaction, data. So you do this exercise parallelly and then link this exercise, then go back to the management. Yes, prima facie, these are examples where potential fraud has happened. This is the, sort of 2-3 examples where end to end we can see that this vendor has benefited by so and so amount by supplying us at a higher rate or lower quality or lower quantity. Any of, these combinations are, possible or favored in terms of credit period, etc. And then we also see that these two people are close to each other because of XYZ reason. In some cases, you will find that the person may also have a stake with the, vendor, right? Once you have done that, then a full-fledged investigation will start. So step one always is to size the engagement and do a step-by-step approach to prima facie establish that yes, there is a potential fraud over there. Once you have done that, then within that, then you will identify in the mail through which the quotation is there, who else is marked, which means they are also involved. In the holiday that they have gone, who else has gone with them? If they are talking amongst each other about a potential, sort of a scenario where they need to, do something for a, vendor, or if they are transferring data to a personal email ID and another employee's personal email ID is also marked, over there. So you identify who are the additional people who are involved, who are the additional vendors who are involved, because you started with one vendor, but the same thing may be happening with other vendors as well. So who are the other additional vendors involved? Now, this person today is in location X, but was there in location Y earlier, which means you need to look at that location as well, what was, happening. So you look at the vendor, more vendors, you look at the location, more location, you look at the person, more people, who are, involved. And that is how you sort of look at the complete picture, where all the fraud could have happened in different types, in different scenarios, and what is the total loss that has been incurred to the, organization. I hope Vivek, I was able to answer your question.